Hi there, traders. On this lesson, I'm just gonna teach you guys the different types of market conditions. So, you guys probably heard about a bullish trend and a bearish trend, and a consolidation or a range. The market moves in waves. So, what I mean about the market moves in waves is that this is the two different type of market conditions we have. It's basically, but for me it is two, because my trending market is either bullish or bearish. So let's take an example for a bullish market. What we're gonna need for a bullish market is, once price create a form of a high, price retrace back, creating a higher low, break this structure, right? Creating a new higher high, and price retrace back and respect that and break previous structure higher highs to create this new higher high. So let me just jump more into theory, right? This is a higher high, right? Because why this is a higher high, is higher than our previous high. Let me just make this example right here, right? This high is higher than this previous high. So once we break our new form of a structure highs, we creating a new higher high. This is a higher low. This is only a high, right? This is only a high. But once we're creating a new high, this is going to be a higher low, right? So once we continue with this momentum here to the upside, we're creating a new higher high, right? And this is going to be a new higher low. So this is a trending market. This is what you will get in a trending market: higher highs and higher lows, right? So let's take a look at in the bearish market. Just make my color red. This is once the market is coming to the downside. So we will see price continue to the downside, retrace back, continue to the downside, retrace back, continue to the downside, retrace back, continue to the downside, right? So we could say this is a low, right? And this is also a low, right? Because why we don't can we cannot see the other previous structures yet. So this is basically what we feel first will have. So once we break under this previous structure right here, we're creating a new lower low. It must break under this structure, right? It must break under this structure lows. So now we have a new lower low. Once price retrace back into structure, right, and continue to the downside, break these lows, then we have a confirmed lower high, right? And then we can see here we did create a new lower low, right? Here we can see price retrace back into structure. This is a form of a new lower high. Once price starting to break this structure here to the downside to create this new lower low. So the reason why this is a lower high, because it's lower than our previous high, right? The reason why this is a lower high, it's lower than our previous lower high, right? So this is what we will look for in a bearish market. Once price is continued to the downside, right? Price moves in waves. So let me just complete that theory about price moves in waves, right? We're gonna see price continue to the upside or continue to the downside, but with these waves we will see price create either lower highs and lower lows, or higher lows and higher highs once price continue to the upside. In a sideways market, we will not determine if price creating higher highs or higher lows. Price will only move to the side. We only will see price trade in between two volatility zones. This is what we will most likely see what price will do. Price will only bounce from one level to the other level to this other level. So price is not basically creating higher highs and higher lows. We can either call this a range, consolidation, or sideways market. It all depends on what the concept is, right? You can name it whatever you want, but the concept must remain the same. So let's take a look right now on the charts to show you guys what I mean about market structure. Let me just different types of market conditions. So let's jump into this market. So just go from this side, right? So what we could see right here, price starting to continue to the downside, right? We can see we have a lower high. This is not a lower high yet. Reason for that, guys, is that we didn't break under this reason yet. We have this breakout of structure, right? Price retrace back, right? Price continue to the downside, create a lower high. This is our lower high, right? Reason why this is a lower high, it's lower than our previous uh high, right? And this is a lower low. The reason why this lower low, it's lower than our previous lows right here. So we break out of the structure, right? Then we create a new form of a lower low. Price retrace back, break under the structure, right? You have a new confirmed lower high. So there we can see price continue to the downside, retrace back, and then basically continue all the way. So we have a new lower high and we have a lower low right here. So this is basically the understanding of lower highs and lower lows in a downwards market. So what we could have seen right here, price rapidly continue to the upside, create our first new high. Right, that is only a high. We didn't create a higher high yet. Price retrace back. This move break. Excuse me. This move break out of this previous high. So what is this going to be? This is going to be our new higher high, and this is going to be our new higher low. So this is going to be the area that we will see. So if price can break out of this highest point, we will most likely say price continue to the upside. But what we could have seen right now, what price basically starting to do, price is moving to the side. Price is creating a consolidation or a range. We can see price is not moving, create price is not creating higher highs or lower highs or any of that sort. Price is only moving to the side. So after scenarios like this, guys, what you must do is wait for price to break out of wait for price to break out of either direction, either to the upside or either to the downside. But we're not gonna talk about that right now. We're only gonna look out for market conditions. So what you guys could have seen right here, we have this higher low, breakout of this structure, confirmed higher low, and there we have a new higher high, and this is a higher high, this is a higher low. We have this momentum here to the upside, price retrace back, and there we can see what price basically starting to do right now. Price starting to create lower highs. This is a lower high. The reason why it did break out of this structure to confirm this lower low and confirm this lower low. There we can see price retrace back, and there price continue all the way to the downside. This is a new form of a lower high, and this is a lower low. Price retrace back to structure, continue to the downside, right? Price create this new lower high, and here we have a new form of a lower low. Sorry guys, my writing is really bad, right? So here we can see price retrace back. This is our overall structure, lower high, price retrace back, break this structure, right, with this move right here. So this is a new form of a lower high, and this is our new form of a lower low. Here price break under this structure. Just down here we have a lower high, and we have this new form of a lower low. So now we can say we're basically trading in between this region and this region right here. So now you guys could see price basically starting to do what? Form a range to the upside. Here price retrace back, and there we can see price starting to range. Right, in this range we cannot do nothing. We must just wait for price to break under. Here we have a break under, but price only come back into our previous lower low zone. So let's take a look for more examples on sideways markets. It's pretty simple. Yeah, we can see we have this sideways market right here. We have a sideways market right here. It's ranges. We don't trade in ranges. We're only gonna wait. So what we could see right here, there we have a range, and here we have another range as well, right? So we're not gonna trade in ranges, guys. We're only gonna wait for price to break out of ranges, right? Here we can see we also have sideways. This is what we call ascending correction, and here's what we call a descending correction. In the next lesson, I'm gonna go more deep into corrections, right? But for now, I'm only gonna teach you guys the overall market conditions, right? For now, we're only gonna focus on market conditions before we're gonna jump into the others lessons, right? So here we can see also prices only moving to the side, so this is also a range for us. There we have a range, right? So in this range we can see price create this wave, and there we have a new high point right there. Price retrace back, break out of this structure, right? So we have this higher high, and we have this higher low, and their price continue to create this new higher high. Price create this new swing, and their price break out of this structure, create this new higher high, and price retrace back and create this new higher low, because right, this momentum did break above here. So in the next video, guys, we're just gonna continue on and go more into depth about the market conditions. So see you guys in the next video.